There are not many independent financial advisors, to my knowledge, that discuss the subject of precious metals, and in particular gold. It's something that a lot of people today are not really aware of and wouldn't know how to buy it. It's true to say that the knowledge of gold and our monetary system has been deliberately discredited. Now, many economists have an intense dislike for gold. They say you can't eat it, it doesn't provide you with an income or a yield. How do you value it? And it does nothing but sit there. In fact, in the 1930s, Lord Keynes called it a barbaric relic. So what's the enduring quality of gold? Why does it hold so much attraction and fascination for so many people in the world, and particularly those in Asia, China and Russia? What's the real monetary significance of gold? Is it money? Is it an investment? Or is it just simply a fad? Now, my next speaker is someone who's studied the history and the evolution of our monetary system, and he has a deep understanding of how we got to where we are today with our current system of fiat, or legally prescribed paper currency, which is based upon a promise to pay, which in another word is, in its basic form, is debt. Claudio Grass is the managing director of Global Gold, a precious metals dealer and storage firm based in Switzerland. He's a strong believer in the free market economics and libertarian philosophies of Karl Menger, Friedrich Hayek and Ludwig von Mises. Please welcome Claudio Grass.
Thank you, Steve. So, thank you very much, Steve, for the nice welcome and also for the invitation to the conference. Ladies and gentlemen, first of all, it is a great pleasure to be back in the United Kingdom, especially after the historical decision to break free from a centralized Brussels. As a Swiss, of course, I'm strongly in favor of decentralization and the protection of individual liberty. The trends we can see today with Brexit and Trump, including the rise of popular anti-establishment movements in France, Germany, Switzerland, Belgium, Spain, Italy, to mention just a few, in combination with several secession movements, just shows that our world is changing, and what we are witnessing with fake news is also obvious that the common man is questioning the official narrative, which has been sold through the mass media for more than a century. This confirms that the change is not coming from the top, quite the opposite. It is coming from the bottom, from the people themselves. We don't know exactly how it will play out, but what is obvious is that people are standing up against the centralized global order that is controlled through different collectivistic government styles, which only come in different colors, such as red, black, green, or brown, but fundamentally are the same. So we live in a centralized system with a centralized banking system in which too big to fail became the official doctrine, where losses are nationalized and profits privatized. A fraudulent system that has the power to create money out of thin air and uses it also to bribe politicians and finance wars. A strong result is the failed foreign policy by the West over especially the Middle East and Africa, from which we now can see the result in the form of mass migration, which has the potential to destroy Western culture, something which has been especially promoted by the 68er generation and their battle cry, the long march through the institutions. Therefore, I believe it makes sense to take a step back and to look at the big picture by discussing some fundamental aspects of our system so that we don't get lost in the details, or as we Swiss used to say, sometimes you can't see the forest because of all the trees. So the aim, therefore, of my today's presentation is to touch on money and liberty based on my strong belief that we need sound money for a sound society. In addition, I'm strongly convinced that we are in a transition period in which the preservation of wealth is the most important aspect. Therefore, I use history as a guide because I truly believe that history does not repeat, but it rhymes. And where we stand when it comes to history, in terms of the general population, I think George Orwell covered it quite nicely. The most effective way to destroy people is to deny and obliterate their own understanding of their history. So when you look at the general population and the Yaos, they have no clue when it comes to history. If we don't know history, we don't see the patterns which are coming up today. So let me start the presentation by looking at how money came into existence. This is basically a timeline that shows all the dominant international currencies over the last few thousand years. And as you will recognize, it has always been gold or silver, with a small difference here over here, that we have a pure fiat money system since 1971, so roughly 46 years. So that shows that what we can learn from history is that money came into existence not by force or legislation. It used to be essentially a market process where people were free to decide themselves what they want to accept as a medium of exchange. So it has to be, easily recognizable. It needed to be transportable, and it also needed to be scarce and rare, so it couldn't be easily reproduced, and it could also act as a store of value. And these criteria are fulfilled by gold and silver. Therefore, it is clear why historically gold and silver has been money for 5,000 years. Even the US dollar became the world currency reserve because it used to be a property title for a certain amount of gold. Today it's just a debt security. It became from a I owe you something to a I owe you. So, and therefore, if we believe that history rhymes, we are sure that all the fiat money system are eventually collapse. And when we also look at the paper money system over the past, they had a life cycle of roughly 50 years. And we are approaching 46 years when it comes to the dollar. So how did the banking system and paper money came into existence? Everything started back in ancient Greece when, even back then it was not wise to run around with a lot of gold. So people were looking for a safe place to deposit their gold, to keep it safe. So we had temples which popped up, and afterwards, we had goldsmiths, which basically had, a safe location. Temples had even, defense armies, and it was considered as a safe place. So people were able to deposit their gold, and in return, they had to pay a fee to keep it safe, and they received a warehouse receipt for the amount of gold. And that's basically also how paper money came into existence, because as we said, the paper claims used to be a property title for a certain amount of gold. But, greed was always a problem, and the first fraud based on history happened 300 before Christ, when basically the goldsmiths realized not everyone is picking up his gold, so basically I can start, to lean out gold physically, which he was not allowed to do so, or he could basically issue more paper claims and earn an interest on that. That guy was brought to court 300 before Christ, because this scam used to be called a fraud. But today, when we look at our fractional reserve system, it's basically becoming the today's system. So it is fraudulent system, what we call fractional reserve banking. So how money printing reduces your wealth? Let me give you a very simple explanation. Imagine you're on an island with 9 other people. The island has a banker and his friend, you and 7 other normal people. The total money supply is, let's say, 1 million. So at the beginning, everyone, of course, gets the same portion, so everyone owns 10% or 100,000 US dollars, for example. But now the banker comes up with a funny idea to print, to double the money supply, for example. and he's printing an additional 1 million US dollar. And he keeps most of the money for himself, or maybe gives him to his friend, the state, or to the banks which are close to him. And so what has changed? I mean, your initial wealth used to be $100,000, that's still the same, but it used to be 10% of the total money supply. Right now, you still have 100,000, but you only own 5% of the money supply. So that means basically that your wealth in terms of paper money has been reduced by 50%. And this is what we call inflation. And so we believe that inflation is the most toxic tax, and it's theft and nothing else. So what has inflation led to over the last decades? This is a slide from the United Kingdom. And what you can see is, what you can see between 1661 up to the First World War, you always had phases when the money was still, linked to gold, that the purchasing power was increasing. So when you had gold, because of production increases, you were able to buy more goods with the same amount of gold. And you can see here, the wars with France and the Napoleonic wars. There, of course, they have been financed with paper money, and that's why prices went up. And I think, what's clearly visible is that since World War II, we have a huge problem when it comes to inflation. It's like playing Monopoly. When you are playing Monopoly and you are the banker and you are doubling the money supply within the game, and you still have the same amount of goods, but more money is chasing it, the only outcome, the logical outcome, is that prices rise. And of course, you need to be the bank, because the bank is going to win all the time. So that's the part about inflation. The other issue, of course, is debt. And this shows in blue, for example, the funded liabilities. The funded liabilities are the ones we hear in the mainstream media. But the red pillows, they basically show the unfunded liabilities. So meaning all the promises by the government in terms of retirement, pension fund, healthcare system, and so on. So the unfunded liabilities, which are not directly financeable through taxes and income for the state, they are just exploded. So Professor Kotlikoff from Boston University, for example, said that the unfunded liabilities of the United States are roughly 220 trillions. And the funded liabilities are 20 trillions. So these debts, explosion, and we can say that most of it, for the Americans, for example, 98% of the debt has been acquired since 1971, since Nixon went off the gold standard. So we believe that these debts are impossible to repay and that it will backfire in the future. The dilemma we are in today, and I believe that economies and civilizations are operating in cycles. We have cycles for everything. We have long-term debt cycles, short-term debt cycles, we have production cycles, we have even traffic cycles. And this slide is from Ray Dalio. He is managing Bridgewater Associates, has 150 billion under management. And he is basically saying, we have the golden line, that's the productivity growth, how fast an economy basically can grow because of additional people, because of production increases. And the long line, that's the long-term debt cycle, which we can already find in the Bible. The Bible was written 50 years. That's the long-term debt cycle. And every 50 years, the debts were forgiven and the slaves were freed. And the smaller lines are the 7-year short-term debt cycles. And when we just look at this theory, we can see we had 2008, the global financial crisis, 2001, dot-com, 1994, the bond market crisis, 87, Black Monday, 7 years back, the savings and loan crisis, and so on. So we have cycles. And another cycle which I find really interesting, also when you look into history, is the crisis theory, or the generational cycles by Howe and Strauss. And what they are basically outlining is that we had every 80 years, we have big movements in our system. We have 4 generations. The first generation is always coming out of a crisis, is embracing institutions, and basically the last generation is refusing institutions, and then we are going into a 20 years period which is quite heavily and quite tough and disruptive, and we are coming out of it with a new kind of system. And when we look at this, we had between 1929 and 1946, Great Depression, World War II, peaked in 1942. If you go back 79 years, the US Civil War, between 1860-65, peak 1863. Another 80 years back, the American Revolution. And if we look at this, then we can say that the global financial crisis, which started in 2008, might last another 20 years. And the peak could be 2021, 2022. So predictions, of course, are always very difficult, especially when it's about the future. But I think what we cannot deny is that we can see certain patterns of the past, which we should use as a guide when it comes to the present or the future. So what had, the green, the Dr. Greenspan to say when it comes to gold? This is the shabby secret of the welfare statist tyrants against gold. Deficit spending is simply a scheme for the confiscation of wealth. Gold stands in the way of this insidious process. It stands as the protector of property rights. If one grasps this, one has no difficulty in understanding the statist antagonism towards the gold standard. He wrote that famous quote back in 1963, before he basically sold his soul to the Federal Reserve System. 3 weeks ago, there was an interview with the World Gold Council, and Greenspan back then said it, and also 2 years ago he said it, that gold is the ultimate currency which is going to be accepted in the harsh crisis scenario. So let's have a look if gold is really a store of value. Just imagine in 1972 you would have had $100,000. How many ounces of gold you were able to purchase? Any recommendations? What do you think? 300. With $100,000 you were able to purchase 1,724 ounces of gold. If you would have kept it doing nothing, it would be today $2 million US dollars. If you want to buy with $100,000 US dollars today gold, you will get 82 ounces based on the price of last Friday. So this just shows gold is a store of value, and it keeps its on the long term. And that's why I also believe it's extremely important when we talk about gold. We're not talking about a trading vehicle. We are talking about a monetary insurance. We're talking about the hedge against all the uncertainties we are facing into today's system. So is gold in a bubble? The red line basically shows you the gold bull market we had, which started in 1968, which topped in 1980. So there we have a 20-fold increase. And we also know that bubbles always end in euphoria and excess. And I think the red line definitely shows that this happened back then. The yellow line, that's the gold price since the 1999, so the current bull market we are in. And as you can see, it's completely different. The prices so far have quadrupled over the last 10 years. And it just shows, it's completely a different point of view. And when we look at the 1980s, we had back then, when Volcker, we had 20 times less debt, and the interest rates were approximately 20 times higher. Today, it's exactly the opposite. So we believe, based on that picture, that gold has been in a correction phase since 2011, but we truly believe that we are standing at the next bull market for gold, which is going to play out in the coming years. Another way we can look at gold, if it's in a bubble, we can compare it with the US debt limit, for example. And as you can see, from 1970, the black line, basically, that's the debt limit. The red line is the debt limit at today's total debt of the United States. And in yellow, of course, that's the gold price. So you see there is a correlation. The overshoot in the 80s, and then basically coming down. And then during the 90s, gold was undervalued. We had all the central banks, the Western central banks, basically selling their gold reserves. And what we can see is, since 2000, really climbed up. It overshot in 2011, and right now the price is too low. So we believe that also this correlation shows that the price of gold is going to rise in the future and is going to close the gap, which we can see right here. So what about the central banks? What we are witnessing is since 2009, 2010, before 2009, the central banking system was selling more gold than they purchased. Especially the Western central banks, they sold their gold reserves. And since 2010, basically, the trend has changed. So now we can see that the central banking system are purchasing more gold than they sold. And what is interesting, and that's what Nomi also talked about this morning, it's a wealth transfer from the west to the east. So there is really a geopolitical power shift taking place. And when we are looking at the biggest buyer in the gold market, it can be said that it's Russia, China, India, certain countries in the Central Asian region. We have Turkey, but also the Middle East. So they are heavily buying physical gold. And so we believe that this trend is going to continue and that it's bullish for gold. Even, as you might see here, even the prices in 2016, the central banks purchased roughly 30% less gold than the previous year, but the overall demand for gold in 2016 was bigger than in 15 because the investment demand for gold increased 70%. So we see the physical demand, the physical side is really healthy, and gold purchases are taking place, and people are acquiring it more than they are selling it. This slide is about China and their hunger for gold. And before I go into the details, this slide reminds me of the United States after the Second World War. Because after the Second World War, the Americans acquired roughly 70% of all the gold reserves of the free world, 22,000 tons. And at the same time, they had the industrial backbone and became, the global industrial engine for the rest of the world, because Europe, Japan, they have been destroyed during World War I and World War II. And when I compare this, then I believe, China is right now, there are some similarities. So this slide is from a guy, and his name is Kos Jansen, and he is studying the Chinese gold market. I believe personally he's one of the best analysts when it comes to the gold Chinese market. And so what he came together with these slides, and he's saying China has today conservatively 17,000 tons of gold. And let me explain the breakdown. Roughly 2,500 tons of jewelry. They have 5,800 tons of domestic mining. So China became the biggest mining producer on a global scale. And interestingly, they don't sell their gold, so they keep it all in China. 7,177 tons of gold were imported through the Shanghai Gold Exchange. Basically, we have COMEX, which is the old world, which is a paper scheme when it comes to gold. I mean, a few weeks ago, if you purchased a COMEX share, basically 500 paper claims per physical ounce readily deliverable at the COMEX. That was the outcome, so highly leveraged. And when it comes to the Shanghai Gold Exchange, really everything is physical. Interestingly, of course, all the non-monetary gold which is imported into China is going through the Shanghai Gold Exchange, and these figures are not included in the official central bank purchases, for example. So that's why still, the official figure by China is that the People Bank of China holds 1,842 tons. And there are also indicators that it could be higher than that, closer to 4,000. Another aspect is that China is really enforcing their people to buy gold. So the Shanghai Gold Exchange, for example, has at least 8.3 million individual. They have an iPhone app. They can buy and sell physical gold. And they have 10,000 institutional clients. So China is big when it comes to gold. And again, it's confirming the power shift from west to east. This is another slide which basically confirms the geopolitical power shift. As you can see, the United States, back in 2001, they had 31.8% of the world GDP. In 2011, it was going down to 21. So minus 30%. Japan lost 35%. United Kingdom, 24%. The winners are China with 153%. Germany lost. France lost. Brazil is big. And here we have the Russian Federation. So we can clearly see a lot of stuff is going on this planet. And I think the world we knew up to today is going to change tremendously in the coming years. So planning ahead in an uncertain world, we don't know what might work in the future in a world full of uncertainty. However, in the words of Nassim Taleb, the greatest and most robust contribution to knowledge consists in removing what we think is wrong. Consequently, it can be said that printing wealth out of nothing is nonsense. It cannot work. It can work for a short period of time, but will always end in a full-scale collapse. So what is Global Gold doing, my company? And I think you can also use it for yourself. If you are interested in physical gold, make sure that you have the points I'm going to mention, that you check them. You have to look into the little details when you're investing in physical gold as your insurance. So what we are offering is a safe, convenient, and efficient way to buy, store, sell, or deliver allocated bullion gold, silver, platinum, and palladium bars and coins in Switzerland. And we also have storage facilities in Hong Kong and Singapore. We look into the little details which we believe will make a big difference in a harsh crisis scenario. So safety is the most important point. Whenever you go into the physical gold market or in the gold market overall and you look at it as your insurance, first of all, it must be physical. And secondly, make sure that you are the direct and unencumbered owner of the gold. Metals are 100% physically allocated in the format of the choice. I mean, if we have a client and he wants to buy a kilo bar or he wants to buy coins, we go out in the market and we buy exactly that format the client is looking for. So we don't sell fractions of a 400-ounce bar, for example. We only buy from the most liquid international, we only buy the most liquid international coins and bars sourced from leading mints and LBMA refineries. So meaning Switzerland is still number one. We have the four oldest refineries are based out in Switzerland, and still 70% of all the gold refining on a global scale is going through Switzerland. So there we have, good access. We have a close chain of integrity, and liquid coins, we only deal with the Australian mint, the American mint, the British mint. So we don't try to sell numismatic stuff or strange, unique metals. What we do is we try to get as much gold for our clients as possible for the best possible price. We offer 3 different storage solutions. So we have an entry level, which is so-called the standard allocated storage, meaning if someone of you is buying, let's say, a 1 kilo bar, then we would have 10 other clients, they also have a 1 kilo bar of gold, then we basically would store all the 1 kilo bars on the same pallet, and we don't directly allocate the serial number of the bar to the client directly. But we have always 100% of the metals are physically covered. So this allows us, when we have to sell, the client he purchased a kilo bar of gold, and now he wants to sell it. So that gives us the flexibility that we can go to that pallet and just pick 1 bar and sell it. So that's the entry level. Then we have a segregated box storage. So meaning whatever we buy on behalf of our clients is going directly into a box, and it's kept in individual. So meaning if you buy bars, you will receive the serial numbers of the bar. If we buy coins, you will have exactly those coins that we had to buy on behalf of you. And then the third option is the key box storage. And that's basically a kind of safe deposit box, but outside the banking system and fully insured. So we have a box where you can put in 30 kilos of gold, then we lock it, and we give the key directly to the client. So he is then the only one having direct access to the metals. And so these are the 3 storage solutions that we are offering. At the moment, we have storage facility in Switzerland, and as I mentioned before, Hong Kong and Singapore. Also, I consider Hong Kong and Singapore as a fallback option. We store only in private AAA high security locations. So with the whole setup, people are armed. They have the highest ranking in terms of security, so that the metals are really well protected. And Switzerland, I will talk about later very, very shortly. We believe that Switzerland is the best jurisdiction in terms of protection of private property rights, especially when kept in a real asset outside the banking system. But if we see that in Europe, that Europe is going to change over the coming years, or that it might have an impact also on Switzerland, we always try to think ahead, and that's why we came up with Hong Kong and Singapore, so that we would have already procedures in place that we could ship within a short period of time the metals of our clients to another jurisdictions if they agree to do so. The metals are fully insured, and we do a yearly audit with Ernst & Young, where we basically go in and count every single coin, every single bar, so to make sure that 100% of the metals are covered. We are free of cash settlement clauses and the like, meaning when you are thinking about going into gold, I can only urge you to always look at the terms and conditions. Because what I have found so far with banking products and so on is they all have a cash settlement clause. And the cash settlement clause means that it's stated if there is a harsh crisis scenario or a monetary crisis, that the bank basically has the potential or has the possibility to pay you out in cash instead of metals. And I think that's exactly what you don't want to have. You want to own physical gold for a harsh crisis scenario and then make sure that you also get it, and not that you receive the money which might be under heavy pressure in such circumstances. So we as a company, we don't hedge, we don't pledge, we don't pre-finance, meaning we don't have our own stock. Because if we would have our own stock, we would have to hedge and we would be exposed to financial risks. So we are conducting that business in the most conservative way, meaning when a client wants to buy metals, he has to wire the funds to us, and then he can send us the buy order, and when we both have together, then we execute the trade. But we are not exposed, to financial risks, and so that's why, every coin has two sides. But I believe for our solution, which is really a kind of niche solution, it absolutely makes sense to conduct the business in that old-fashioned way. You can pick up your metals at any time. You can ask for physical delivery at any time. For a pickup, we tell our clients, give us 48 hours, 72 hours, so that we can arrange the security clearance at the storage facility on behalf of you. But you know, the metals are there because we purchase them in the format you told us to do. So the metals are fully yours, so you can pick it up at any time and have it available when you need it. Transactions can be conducted without personal presence. You can do it via the internet, email, fax, or even postal mail, or you can show up in our office. And so these are the possibilities that we are offering at the moment. We also allow in-kind transfers. In-kind is if you already own physical gold in the United Kingdom, for example, or in a bank, and you don't feel that comfortable, then you basically can get in touch with us and we can organize to take the gold which you own under the custody of Global Gold. So that's also a possibility which not too many companies are offering, but we can do that. We have a fair and transparent product pricing. So you will always see how much money you wired. You will always see how much we had to pay for the product itself, how much our brokerage fee was, and how much cash is remaining. And so the standard operating procedure is that whenever the trade has been executed, that we wire back the remaining cash residuals to the client's reference account of the client. We have no VAT because the setup that we are having that's especially interesting for white metals. Of course, gold is still considered as money in Switzerland. That's why we don't have VAT. But when it comes to silver, platinum, palladium, we have 8% VAT on that. We are operating in our vaults in a tax-free zone, meaning that when you buy, for example, silver, you don't have to pay VAT. As long as the metals are stored in our safe, in our vault in the tax-free zone, so you can buy and sell without paying VAT. Once you want to pick up or you ask for physical delivery, then basically you would have to pay the VAT of, in Switzerland it would be 8%, and if you ship it to another country, then the domestic rule in terms of VAT would kick in. But I think that's heavily, that's quite attractive, especially for people who want to buy and sell silver, not on a regular basis, but maybe once a year or twice a year. So without avoiding the 8%. And most importantly, we store everything outside the banking system on the Swiss jurisdiction. And so we do a proper due diligence. We are regulated by the Financial Market Authority in Switzerland. The only reason that we store outside the banking system is that we are convinced that in the next crisis, the banking system will be heavily affected. And so therefore, we prefer to have the metals in the private AAA high storage facilities. So let me talk about quickly why Switzerland. Because our country is still based on the principles of subsidiarity, which is limiting the power of the politicians. So Switzerland consists of 26 states, and every state has they are ruling over the education system, the healthcare system, taxation. That's basically up to the state and also up to the municipality. So meaning, based on that structure, we keep competition within Switzerland, within municipalities, within states. We keep it ongoing. If one state would go for too high taxes, then basically the people would be able to vote with their feet and to move a few hundred meters or a few kilometers, and they could basically then show the politicians that they have to reduce the taxes. So but the whole idea of Switzerland is, we came together in 1291 because we were saying we don't want to pay foreign dukes, we want to stay sovereign, we want to stay independent, and this is something which still the Swiss people have embedded in their DNA. We never had a president, we never had a king. I mean, we have 7 presidents, so we have a distribution of power on the executive level. And the remaining, the sovereign, are still the Swiss people. So whatever our politicians decide, and the people don't agree with it, then we can vote against it or we can accept it. But we have the instrument of referendum and initiatives to basically make sure that the politicians don't have too much power and that the people and their will is the sovereign. And there I can give you an example. We had roughly 1 year ago, we had the first nation that had to decide for the universal basic income, so meaning $75,000 on an annual basis for free, paid by the government. And the Swiss people refused it with 78%. If you would have brought up that kind of topic anywhere else on this planet, I'm 100% convinced that most of the people would have said, yes, of course, give me the 75,000. But this just shows, the Swiss, they don't like centralized government, and they are more individualistic than the rest of the planet. And this is why I believe it's really, governments are trying to steal as much as they can from their own people. And when they have the power to confiscate, that's also a big issue. And I think that cannot be done in Switzerland. So, one man once said, Gilbert Chesteron, he said, the golden age will return to man when they have forgotten gold. So when you look at all the total financial assets on this planet, 0.51% are in the gold business. So it's, tiny. It's really tiny. So I believe, we almost in the West especially have forgotten gold. And therefore I'm sure, that the people will read will realize that gold is money. That's what JP Morgan always said. Gold is money, anything else is credit. And therefore, I would like to urge you, think outside the box, use your own understanding and mind, and do what is necessary to protect yourself or your beloved ones for the challenges ahead, because this world is changing. Thank you very much.
Any questions for Claudio?
Thank you, Raj. As I understand it, you've mainly talked about the price of gold being influenced by demand. What about supply? What about extraction costs?
I don't, when you look at the stock-to-flow ratio, let's say all the gold which has been digged out in the past, it still exists. It's still there. We have roughly 172,000 tons of gold on this planet. 50% is in jewelry, 50% is central bank investment demand, and so on. So the stock-to-flow ratio is really high. We have roughly 2,500 tons on an annual basis which are minted. I personally believe the supply doesn't have such a huge impact. So of course, when the supply is going down, it might be a problem in the future. So that gold is going, the physical gold is going to spike. But when we look, as I said, the gold market is heavily leveraged. I still believe, that gold is in the center of our monetary system, and that's why, the central banks are buying gold again. But they have a lot of paper claims, or what we have discussed before. It's a kind of fractional reserve as well. Is that answering?
Yeah.
Thank you.
Anyone else?
Thank you for your very interesting talk. I know very little about gold, but I did read once that in the Middle Ages, when Spain took over or conquered South America, it brought back masses of gold into Spain, and this caused an economic crisis. In other words, there's just a certain amount of productive potential in a country, and if you increase the supply, whether it is of paper money or whether it is of gold, there will be a problem. Right? Are you familiar with that?
Yeah, I haven't studied, I know about the conquistadors who basically brought back that gold, and then of course more gold, so prices were rising also in Spain back then. But I think really the difference, when you look at the system back then and you look at the system today, I mean, paper, paper is roughly 7 to 9% of the total money supply is in paper. The rest are digits on the computer screen. And you cannot print gold. It's impossible. So, but you can print, of course, digits or paper. So I believe right now, when you look at the total debt and the total credit in the system, and then the little amount of gold in comparison, I can only recommend, to put some of my assets into physical gold, because when the markets are crashing, it's a hedge. That's all what gold is for. It's a hedge. It's a store of value over a long time. So I don't see I mean, inflation, I see it coming, but because of the paper, but not because of gold.
Last question? No?
Thank you very much.
Thank you.